Hello guys, welcome to the new session of ours. That is the 15th class in our row. This is Pragya and we will today also be continuing the banking and financial awareness portion of ours. So friends, the team of Knowledgist, we are offering a new batch. This new batch is regarding the Indian Bank's upcoming exam for the post of LBO. Now, what is LBO? LBO is the local bank officer. In this new batch, you will be getting live classes along with the recording sessions if in case you are missing out any of the live sessions. Along with a complete set of mock tests would also be provided to you guys. So if you are interested and if you are keen to enroll in these new courses of ours, then you can check out the description box. There you will getting the complete information, and apart from it, you can also contact us directly through our WhatsApp number only. Okay. So yeah, now let's move to the further part. Coming to the very first question of the day. What is it asking? What is the very first question talking about? It is asking, what is the primary purpose of the RBI's new delegated UPI payments feature? Our very first question today is talking about the delegated UPI payments feature and its primary purpose. What is the RBI's primary purpose behind this decision of implementing this new delegated UPI payments feature? The options are whether it is to enable businesses to make bulk payments, to allow multiple users to transact using one UPI linked bank account. Option C, that is to link multiple bank accounts to one UPI ID, or option D, that is to increase the UPI transaction limit for the international payments, and E, that is to enable cash withdrawals via UPI. So, what according to you should be the correct answer, guys? Here we are talking about the new delegated UPI payments feature. What is it and what are the primary purposes? What is the main reason of RBI's new decision? Anyone would be giving you few seconds to answer it out. If any friend of mine is having any idea. Okay. Hello, Sandeep. How's you? Sandeep is saying it to be option B. Karan is saying it is option B. Anyone else? Okay. So yeah, this time, of course, both of you are correct. It is option B. That is the primary purpose of RBI's new delegated UPI payments feature is to allow multiple users to transact using one UPI linked bank account. And this delegated UPI payments feature is solely designed to enable individuals to transact via an existing UPI linked account without needing their own bank account, which is especially beneficial if we talk about the rural areas. Great. Okay. So yes, Ravi Nayak and Webhub are also saying that option B is correct one. I think no one is having any kind of issue regarding this question. Should be moving now. Coming to the next question, it is asking, what is the new UPI transaction limit for tax payments as announced by the RBI? The options are rupees, all are in rupees, rupees 1 lakh, rupees 2 lakh, rupees 3 lakh, rupees 5 lakh, or is it rupees 10 lakh? Hello, Purvi. Anyone? The new UPI transaction limit for tax payments, which is being announced by RBI. What is it? Sandeep is saying it is 5 lakh rupees. Okay. Other friends of mine, is anyone having any idea? Okay. Karan D, Ravi B, Webhav B, Purvi D. So let's see the correct option this time. Yes, it is option D, that is rupees 5 lakh, which means RBI has increased the UPI transaction limit for tax payments. Previously, it was rupees 1 lakh. Now it has turned to rupees 5 lakh per transaction, and it makes it easier for the taxpayers to make digital tax payments. Why? Because the whole amount, the new transaction limit has been increased. So using a single transaction, within a single transaction, more amount can be now transferred by the highly taxpayer persons. Clear? Coming to the next question. It is talking about, according to the RBI's revised instructions on BDDR for cooperative banks, what must banks do with the BDDR balances as of March 31, 2024? Now, this question is asking, we go through the RBI's revised instructions on BDDR regarding the cooperative banks, then what must these banks do with these BDDR balances as of March 31, 2024? Whether they should be transferred them to the to the profit and loss account as income, recognize them as an expense in the profit and loss account, identify and quantify them for adjustment in the next financial year, or option D, that is, use them to reduce gross NPAs directly or merge them with Tier 2 capital. What should be the correct answer? But first of all, what is BDDR? Anyone? What is BDDR balance? Anyone? Okay. So yes, BDDR, it is bad and doubtful. It is bad and doubtful reserve, which in acronym we call as BDDR. What is it? It is a reserve that banks maintain to address bad debt. Okay. So RBI recently had issued revised guidelines for the treatment of these BDDR by cooperative banks. And these guidelines are aiming to ensure uniformity in the treatment of these BDDR for any prudential purposes. So what, according to my friends, should be the correct answer? Rohit D, Karan B, Sandeep D, Vipin B. Yes, Purvi, BDDR is bad and doubtful reserve. Friends B. Great. So the correct option this time would be, friends, option C. That is, if we talk about or go through the RBI's revised instructions on BDDR for cooperative banks solely, then their identification and quantification is must. They should be identified and quantified for adjustment in the next financial year. Clear? So RBI, what does it require? It requires banks to identify and quantify BDDR balances as of March 31, 2024, and then appropriately adjust them by March 31, 2025 to align with accounting standards. I think this is clear. Coming to the next question. What it is asking, what is the consequence of not requiring BDDR as per the applicable statute according to the RBI's revised guidelines? Now, this question is asking about the consequences of not requiring these BDDR according to this RBI's revised guideline. It must be returned to the depositors. It should be transferred to Tier 2 capital. It can be transferred to general reserves or balance in the P&L account. It should be kept as Tier 1 capital without any adjustments, or it must be written off against future profits. What, according to you, should be done here? Anyone? Vipin is saying C. Purvi C. Anyone else? Ravi C. Okay. Sandeep C, Riba C, Prince C. Great. So the correct option this time would be option C. That is, it can be transferred to general reserves or balance in the in the PL and accounts. Now, what are these PL and accounts? I am not having any idea. What is a P and L account? Anyone? Anyone? Daydreamer. What is P and L account? Daydreamer. Daydreamer, Rohit, Riba, Sandeep. Anyone? What is PL and account? Yes, great. Profit and loss account, Sandeep Mishra. Coming to the next question, what it is asking, which state has witnessed the highest number of Urban Cooperative Bank license cancellations by the RBI since 2014. Oh God, RBI just keeps on cancelling. Karnataka, Uttar Pradesh, okay, Gujarat, Maharashtra, or West Bengal it is. What should it be? What is the name of that particular state that has witnessed highest number of UCB license cancellations by RBI since 2014? Anyone? Prince? D, Riba D. Okay, a number of my friends are saying it to be option D, which is correct. Maharashtra, which means Maharashtra has seen the highest number of UCB license cancellations with 36 out of the 78 cancellations since the year of 2014. Okay, now coming to the next question. What percentage of rupees 2000 banknotes in circulation as of May 19, 2023 had been returned by July 31, 2024? Whether the percentage of rupees 2000 banknotes in circulation was 95.72%, 97.92%, 92.85%, 98.50%, or 96.34%. Anyone? Would be waiting for 5 seconds. No issues. Take your time. Take your time and then try to reply. Sandeep 97.92, Prince D, Rohit Patil 97.92, Shivani B. Ravi Nayak B, Purvi B. Okay, great. So the correct option this time, pardon, it would be option B, which means 97.92%. So the RBI reported that 97.92% of rupees 2000 banknotes in circulation as of May 19, 2023 were returned by July 31, 2024. Clear it is? So what is the correct percentage? It is 97.92%. Coming to the very next question. It is asking, what is the current legal status of rupees 2000 bank notes after their withdrawal from circulation? They are no longer legal tender. They are only accepted at RBI issue offices. They continue to be legal tender. They can only be used for transactions within banks. So they must be exchanged by a specific deadline. What it must be? Anyone? No one. How come it be possible? Yeah, great. It is, yes, it is option C, which means they continue to be a legal tender. Yes, a number of you are saying option C. Ravi Nayak, dear, it is option C. That is, despite being withdrawn from circulation, these 2000 rupees banknotes continue to be a legal tender according to RBI. Still, coming to the next question, what it is asking. What change is proposed in the Banking Laws Amendment Bill 2024 regarding the number of nominees in a bank account? Important. Increase from 1 to 2, increase from 1 to 3, increase from 1 to 4, no changes, remains 1, removal of the nominee provision. What it is? Coming from 1 to 2, coming from 1 to 3, got up to 1 to 4, the number of nominees. What should it be? See, I know a number of you must be thinking that ma'am is, ma'am keeps on asking us, what is the correct answer? What is it? What is that? See, the reason is I would not mind to just come here and complete as much questions as possible. Okay, this would be make my class, more easier for me as well, because I will not have to anymore interact with you. Okay, but what is the reason why I try my level best to make you guys comfortable? Because the only way in between you and me to interact is this live chat box. I can ask you, you can reply me in the form of options. This is the mutual thing which can be done in between us. So that is the reason. And it gives me immense pleasure when you guys do reply. This time, Sandeep Mishra is saying 1 to 4, Avinash C, Ravindra Nayak C, Shivani C, Riba Kaushik 1 to 3, Vipin A, Daydreamer C, and Anil Kumar, option C. Which means the correct option this time would be option C, that the number of nominees have been increased from 1 to 4. See, the proposed amendment aims to increase the number of nominees in a bank account from 1 to 4. What is the reason? What is the basic reason behind it? The basic goal is to reduce unclaimed deposits. Clear? As more of the number of nominees would be there, the deposits, at least anyone among them would be, claiming the deposit. So, next question. What is the proposed new threshold for substantial interest for directorship in a bank under the Banking Laws Amendment Bill 2024? Rupees, all are in rupees. 5 lakhs or 5% of paid up capital, 1 crore or 10% of paid up capital, 50 lakhs or 15% of paid up capital, 2 crore or 10% of paid up capital, and option E, that is rupees 3 crore or 20% of paid up capital. What is the proposed new threshold for these substantial interest for directorship in a bank under Banking Laws Amendment Bill 2024? What should it be? Karan D, Riba Kaushik C, Anil C, Ravindra C, Prince B, Daydreamer D. Great. This time it would be option D, my friends. Okay. What it is? It is option D. That is rupees 2 crore or 10% of paid up capital, which means this bill proposes to redefine substantial interest for directorship, increasing the limits from 5 lakhs to rupees 2 crore, or it would be 10% of the paid up capital of the company. Next question is asking, what percentage of revenue do Indian banks currently invest in IT according to the BCG report? If we talk about or go through this BCG report, then we have to tell about the percentage of revenue which our Indian banks currently invest in IT, whether it is 3% of their total, 5%, 7%, 9%, or 12%. Anyone? See, this question, Sandeep, this question is simply asking the percentage of revenue which our Indian banks do invest in this IT sector. Information technology, IT, according to the BCG report. Ravindra B, Karan 5, Anna B. So the correct option this time would be option B, which means 5%. So the BCG report states that Indian banks invest only about 5% of their revenue in IT, which is significantly lower than the 7 to 9% invested by the global banks. So here we came to know about two things. Firstly, how much do the Indian banks invest in IT? And secondly, how much do global banks invest? Global banks investment ranges from 7 to 9%. Coming to next question. Pardon. By financial year 26, what percentage of digital payments and loans is expected to originate from third-party platforms as accessed by BCG? We have to tell the percentage of digital payments and loans which is expected to originate it from third-party platforms. Whether it is 50%, 60%, 75%, 80%, or 90%. Anyone? Anyone is having any idea about the percentage of these digital payments and loans? Okay, Ravindra E, Prince C, Karan C, Anna 75, Sandeep 75. Daydreamer and Vipin are also saying it to be C. So the correct option, the confidence level was highest with option C, which is 75%. So BCG assessed that nearly 75% of digital payments and loans are likely to originate from third-party platforms by the financial year of 2026. Clear? Coming to the next question. What is the primary objective of the RBI's draft circular on the management of model risk in credit? Whether it is to standardize credit scoring models across all lenders, to ensure faster decision making using credit models, to mitigate risk arising from the use of credit management models, to reduce loan loss provisions by lenders, or to promote the use of technology in credit risk models. Anyone? Anyone is having any idea? Would be waiting for 5 seconds. No issues. Sandeep Mishra, BCG stands for, dear, I'll be writing here. It stands for Boston Consulting Group. Boston Consulting Group. What is it? It is a global management consulting firm, and it basically helps businesses and you can say society in tackling up with the challenges and take advantage of opportunities. So yeah, this is its report in short is called as BCG report. Okay. Boston Consulting Group. It is basically a group, a firm. So the correct option this time, anyone? Purvi C, Vipin C, Avinash C, Anna C, Prince E, Daydreamer A, Riba C, Prabha C, Sandeep and Sandeep A, Rohit Karan C. Great. So the correct option would be option C, which means the primary objective of RBI's draft circular on the management of model risk in credit is to mitigate risks arising from the use of credit management models. Next question is asking, according to the RBI's draft circular, what should be included in the model validation framework for credit management models? Integration with external credit rating agencies. Option B, consistent, unbiased, explainable, and verifiable outcomes, automated loan approval processes, compliance with international financial reporting standards, integration with digital payment systems. What should it be? What should it be? Okay, Preeti Singh, option C. Let us go through it. The correct option this time is option B. That is, if we talk about RBI's draft circular, then consistency, unbiasedness, explainability, and verifiability, these are the outcomes which should be included in the model validation framework for credit management models. Okay, and so these are a crucial part of model validation framework. So number of you were already saying B. That is Purvi, Vipin, Anna, Karan, Rohit, Sandeep. Everyone was with option B. Coming to next question. What it is asking, what was the significant milestone achieved by NIPL in Nepal as of August 2024? Launch of rupee cards in Nepal, introduction of cross-border UPI, P2M, that is person to merchant transactions, surpassing 1 lakh cross-border UPI person to merchant transactions, partnership with Nepal SBI Bank Limited, that is NSBL, expansion of UPI to Sri Lanka and Mauritius. What is it? Anyone? Okay. So firstly, talking about NIPL, what is NIPL? It is NPCI, International Payments Limited. NPCI, International Payments Limited. And it is a subsidiary of NPCI. What is NPCI? It is National Payments Corporation of India. What is the work of NIPL? It focuses on internationalizing the NPCI's payment products and services. It leads to global expansion, financial inclusion, real-time transactions, etc. Clear? Now, has anyone answered? Preeti Singh, option C. Okay, yes. So the correct answer this time would be option C, which means surpassing 1 lakh cross-border UPI person to merchant transactions. So NIPL, it basically reached a major milestone. How? By surpassing 1 lakh cross-border UPI P2M transactions in Nepal, marking significant progress in cross-border payment integration at the same time. Clear? Coming to the next question. It is asking, what is the primary objective of the RBI in creating a public repository of digital lending apps? RBI has recently created a public repository of these digital lending apps. Okay, we have to tell what is the primary objective of RBI's this decision. Whether it is to increase digital lending volumes, to promote new digital lending apps, to protect customers from fraudulent digital lending practices, to reduce interest rates on digital loans, or to facilitate cross-border digital lending. Anyone? Anyone is having any idea? Okay, yes. Great. So the correct option this time is option C. Everyone is correct this time also. I need not to take names again. RBI's initiative is to create a public repository of digital lending apps, basically aiming to safeguard consumers from unauthorized digital lenders who falsely claim association with RBI regulated entities, thereby enhancing transparency in the digital lending sector. Clear? Next question is asking, what is the new reporting frequency mandated by the RBI for lenders to submit credit information to this credit information companies from January 1, 2025? We have to tell the new reporting frequency, whether weekly, okay, whether monthly, weekly, fortnightly, quarterly, or annually. The RBI, it has mandated the lenders to submit their credit information to CICs from date of 1st January 2025. Mimi plays C, Purvi C, Ravindra C, Spreading Kushi C, Sandeep is saying fortnightly. Okay, so the correct option this time would be option C. That is, RBI has mandated that lenders must report credit information to CICs, including CIBIL, CIBIL, every 2 weeks fortnightly. Instead of the previous monthly schedule, this is aimed at ensuring that credit reports reflect more current information. Clear? Coming to the next question. What it is asking, how will the new fortnightly credit information reporting frequency benefit lenders according to the RBI? Whether it will reduce the need for credit checks, it will enable faster loan approvals, it will improve lenders' risk assessment and reduce over leveraging risk, it will eliminate the need for credit information companies, or it will increase the cost of credit reporting for lenders. Anyone? Yes, Sandeep. Previously it was monthly, but now it's 15 once in a 15 days. Spreading Kushi, option C. So the correct option, yes, it is option C. Which means this new fortnightly credit information reporting frequency, it benefits lenders in a such a way that it also improves lenders' risk management and reduce over leveraging risk if any is present there. Coming to the next question. Who has been appointed as the new chairman of the SBI for a 3-year term starting on or after August 2024? Whether his name is Dinesh Kumar Khara, Rana Ashutosh Kumar Singh, Chala Srinivasulu Shetty, Rajneesh Kumar, or option E, that is Arundhati Bhattacharya. Which one should be the correct answer? Yeah. Anyone? Prince B, Ravindra C, Spreading Kushi C, Avinash C. Would be waiting for 5 seconds. Sandeep B. Okay. So the correct answer this time would be option C. That is Challa Srinivasulu Shetty. See, when for the there is a trick to remember this thing. You must have gone through the Welcome movie. There was a character named Uday Shetty. So remember it by that name, because whenever I have to remember any of such things which I am unable to do or I am getting confused, I just remimic it so as to make it as easier as possible. Okay. So who is the one who has been appointed as the new chairman of SBI for a total tenure of 3 years? That is 3-year term starting on or after August 2024. His name is Mr. Shetty. That is Challa Srinivasulu Shetty. Okay. So yes, that's it for today's session. Tomorrow also we would be meeting and would be continuing the further questions. Till then, have a great evening, everyone. Signing off, Pragya this side. Bye for now.